Good afternoon, I'm Davina Smith. In less than a minute, the Reserve Bank will hand down its monthly decision on interest rates. The latest figures showing inflation is slowing, but it's still not in line with the RBA's target. Let's bring in Nine's finance editor, Chris Kohler. Chris, good afternoon. Last month we saw a pause, but there is no guarantee this is going to happen again. What are economists predicting?
Well, Davina, they're pretty split at the moment. ANZ and NAB say we will not see a hike today. CBA and Westpac, though, say that we will, and the market is also saying that we won't. So we're kind of getting different answers depending on who we ask at the moment. But as you say, we had that welcome pause last month. The big question here, is the economy doing what it needs to for the RBA to continue that and give us the second consecutive pause? Of course, we've had 12 interest rate hikes now.
They are on hold at the moment. They will stay at 4.1% for the next month, no change. It is now the second time that we've seen a pause on rates. Welcome relief for mortgage holders, but what does it mean for the economy?
Absolutely. There's going to be a bit of a sigh of relief out there because there was, as we say, a lot of economists and experts saying that we could see a resumption of this hike. You're seeing there on screen what this is all meaning for people out there in the economy. And as you say, relief. We're not going to see these numbers grow anymore as a result of today's decision. But basically, the situation over the last 12 rate hikes is $500,000 loan, you're going to be paying an extra $1,134 compared with what you were paying before those interest rate hikes started. $750,000 loan, the number goes up to $1,700, and a lot of people have those big $1 million loans right now, and they're paying $2,269 extra dollars on average compared with what they were before these interest rate hikes began. Of course, today is about good news, no higher numbers on that front. And to answer your question, yes, the RBA is clearly quite happy with the progress that the economy is making. Inflation now coming down, it's at 6%. It needs to get to between 2 to 3%. That's the target. That is the kind of the gold standard where we need to be. So it's still a long way above it, but the Reserve Bank clearly now more concerned about going too hard and tipping the Australian economy into a recession than not going hard enough, because that inflation number is coming down. Now, the other big factor here, the unemployment rate, still very, very low at 3.5%, and so we've got that room to move. The thing that we now know is that interest rate hikes on hold mean that there are more room for house prices to grow too. Now, we saw another month of increases there. The national house prices grew at 0.7% last month, and so with another month of on-hold decisions, we could see that number go higher, Davina.
Finance editor Chris Kohler live with that breaking news for us this afternoon. Chris, thank you. Well, just repeating, the Reserve Bank has decided to leave rates on hold at 4.1%. We will have the afternoon news as our next bulletin, and you can join us for Nine News tonight at 6 p.m. I'm Davina Smith. Thanks for your company. We'll see you soon.